Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is the weekend edition, your Memorial Day edition, and this is for the 25th of May, 2018. Now, in our weekend editions, we look first at the longer-term chart, the monthly, and then go to the weekly charts. It was fun yesterday because we were talking, do people trade off the monthly charts and so on? I don't think so. I think they give you an idea of what the picture is, but I think your entry points really come off the daily chart more than anything. But what I like about the monthly is it shows me if I've got a trend, and I don't. They have sideways action. At least here you can see how the trend was coming down if you follow the moving averages. Here they're just flat as can be in the water right now, and you can see that flatness as the soybeans are just spinning around right here. When we take a look for trend itself, I created a study called Swing Lines years ago that looks from the current day back. So it'll take today's Friday. It'll look to see if the day before it is today's day a higher high day, a lower and low day, an inside trading day, an outside day, up or down. And then my rules will draw the line accordingly. And the reason I do it that way is I am interested to know, number one, according to what a trend is, and I believe a trend, if it's down, is lower highs and lower lows. If it's up, it has higher highs and higher lows. No trend will have a higher high and in some manner a lower low. If I'm trending, I want to know that. Second thing I want to know, what is the risk from the current price associated with breaking that trend? And in this market, you finish the day out, up for the week, at 1041.5, up 43 cents, and the risk from here is 1056. Should the market get over 1056.5, the pattern will then have been a lower low and a higher high. So that's the risk in the trend. The second thing I want to know is what's the bias of the market. If you go back to right here, you can see how the market had been playing around. We had a break, went down both to the 18-week average and the 100, didn't go any further, played in between that the next week, and this week you've snapped back over it. So what we can say is that the combination of the 18 and the 100-day average offered a support level. The market is not in a trend at all now. Why? Yes, I set a trend on the swing lines, the lower highs and lower lows, but I filter it. And the filter is if you're over the 18-day average of closes and the swing line is down, you have nothing. And that's exactly what I have. When I look at Bollinger Bands will keep the market trading within it 95% of the time. You heard I said we'll keep it. It will. That's the algorithm. That's the basis of how the math's going to move the lines. One of the cool things that you learn easier at times with weekly charts than daily is you'll see that each time you hit a Bollinger Band, you get a reaction. Does it always happen? No. It doesn't happen if the market's already trending. You can go through the band. But in sideways action, this is very important. Once the market breaks out, it can get up and over the band. So what you've done again is you got over the band, fell back, and now you're going sideways, and notice how the top band and the bottom band are racing to the market. At the same time, momentum, which had been pointing down, is now going quickly back to neutral to maybe up when the market reopens on Monday. And that'll be, I think it's actually Tuesday with the Memorial Day holiday. The meal market, if you go to the daily chart, it's been under pressure. If you come to the weekly chart, you have a pattern of higher lows and higher highs. Now, there's divergence here, and that's because the momentum is pointing down, even though the bias is up. If this market gets down under 374.30 and closes under 373.70, the pattern will become one of lower highs, lower lows under the 18-day average, which sets up the potential for a test of the lower Bollinger Band. On the way back up, even though the beans have rallied, the oil carried the rally, not the meal. The meal was up $4 for the week, the soybean oil 36, and the soybean oil's back to the 18-week moving average of closes, just sort of sitting here. And if you look at this market since 2017 has been doing that. Right in December, it stopped being able to close over that number. And if you even look at this week's close, it's back under that 18-week average. So we're seeing the resistance point in the market. In the corn market, this is a bullish market. Number one, momentum is still pointing upwards, still locked in bullish. Number two, higher lows, higher highs. You're at the upside target resistance of the upper Bollinger Band. The odds of closing over a Bollinger Band just 5% of the time. Notice how the market closed 406, did get to 412.25. But it's riding that band, and that is bullish for the market. So is wheat. Wheat came back and challenged its 18-week moving average. Momentum is still pointing up. People asked in the live webinar, do I count on a weekly chart overbought, oversold? I do not. I use it just as a raw momentum figure. And I see that as friendly. The market is over the upper Bollinger Band. You only stay over it 5% of the time, so the market's getting slightly ahead of itself. And you can see when it does get ahead of itself, it has a tendency to pull back into those bands, whether it's to the up or the downside. So I'm favoring a pullback at some point if you want to be looking at the long side. In the cocoa market, you have no trend at all. You've got a lower low and a higher high. Momentum is pointing down as measured by the slow stochastic, and the bias is up. Let's just call it one ugly chart, nothing to do there. In the sugar market, you finally got this week up to the resistance of the 18-week average. First time you've done it in 2018. Is that enough to argue that we've made a bottom? Don't know. What I can tell you is you're out of the bear trend. You can restart one, but you're out of this current one. Momentum's pointing up right into a resistance point, and the swing line is up. Trend, no, you didn't close over that 18-day average, so I can't say that everything's pointing up. In the coffee, you got a lower low, a higher high, narrow bands against the 18-day average. This market is trying to lift itself up, but without that pattern of higher lows, higher highs, it's a bit difficult. In the cotton market, each break to the 18-week moving average of closes all year long has been met with one thing: buying. And each time it's done it, you've gone back to the upper Bollinger Band. That's the obvious. So this market has definitive upside bias to it. Momentum is still pointing up, and that's what I look at. It's not a trend because you got a higher high and a lower low. In the cattle market, we had a neutral cattle on feed report today. The market's been in a long-term pattern of lower highs, lower lows, riding the lower Bollinger Band, rounding around, but a downtrend with two levels of resistance from 115.16 to 118 even. Momentum still down in the market. In the hog market, the opposite. You got an uptrend. Higher lows, higher highs. I'm looking for resistance at the 80.35 level. Momentum is still up, and support, I'd say back here at the combination of the 18 and the 100-day moving average of closes. Those are both weekly moving averages. Want to remind you about my commentary. And if you go to our website at www.iraepstein.com and go under the word research, I put out several types of commentary. The commentary I put out is written in two of my research reports. It is the same wording. One of them are for people that only want the research. The other is for people that want the research and trade recommendations to go with it. Let's assume you want to try the trade recommendations. Well, you also get a subscriber video, cover 40 charts in the morning with all kinds of trade ideas. And then at the bottom of my research report, you're going to get to an area where it says buy here, sell there. I'll do it in different colors for you, just like you're seeing there, and away you go. You get updates during the day if I issue a special update and some of the other audio commentaries I put out. If you're only the commentary, you don't need the trade recommendations, and then you don't need the video that says buy here and sell there. It doesn't make any sense. You only want the commentary, you do that. I make a big difference in the pricing of the two of them for you as well. But why not take advantage if you haven't tried it? If you have, pick a product and away you go. It's www.iraepstein.com, right under the word research. See you there. Take care.